So yes, again, a sea of red, but a few glimmers of light, and mostly within the industrial space. Take us through the day that was. And again, I mentioned the Swiss National Bank intervention within the currency market. What is your sense of all the market news that has been coming through?
Well, it's clear that, markets are still very risk averse, and, the world is a very uncertain place. And so it's probably not surprising to see red on the screens. Markets have been rolling over, so momentum has certainly slowed. So what you're seeing is money moving from risky assets to non-risky assets. So I suppose if you have to start at the early hours of the morning, I mean, when that ruling was made that from now on the Swiss franc will be pegged to the euro. I mean, the Swiss franc has always been seen as a very safe haven asset, hence it's been one of the strongest performing currencies in the world pretty much. So a big move relative to the rand. I think it's weakened by roughly about 9%. So the read-through to other kind of safe haven assets is certainly very positive. You would expect the likes of gold to benefit, bond markets to benefit, and I would probably argue that is why you're seeing a lot of green on the screen in terms of the retail sector. I mean, quite surprisingly so, our kind of retail sector and emerging markets like consumer-related shares is actually seen as safe havens. I mean, I don't quite fall into that camp, but that seems to be what is going on, and that kind of tells you a little bit about the market movements, I suppose, for the
okay. So where are you seeing? What are you seeing as safe right now? At a time where we're seeing massive volatility within the commodity space, talk of a double dip scenario playing out, possible recession in some parts of the world. Is there a place to hide apart from gold, of course?
Yeah, look, tricky. I mean, I would have said gold, but then you now said apart from gold. So let me rather say, I think that if you look at the equity markets, I think certainly gold equities are not discounting the current level of gold prices. So if I had to invest in a type of gold-related asset, I would much rather buy gold equities. It doesn't matter if it feels very uncomfortable and that it's not very high-quality companies, but they're certainly not discounting the current gold price. If you look at other assets, I think you can still do better by buying a basket or certain large cap global shares with reasonably high dividend yields, 45% on relatively low earnings multiples, and on a 5 to 10 year view, you'll do much better out of those kind of shares than what you will be doing should you be buying government bonds where yields are very low currently. You're not being compensated for any risk whatsoever. So generally speaking, even though we are short-term nervous, we think for long-term investors there is certainly still an opportunity to invest in global equities specifically. Emerging market equities are, I think, still looking relatively more, say, overvalued because that has been seen as a safe haven. But as long-term investors, you kind of need to weigh up I suppose the risk that you are taking on versus the price what you are paying. And I think a very good example is the PE multiples of our local retailers, which is say 17 to 18 times, versus similar companies trading in Germany or so forth, trading on much lower multiples. So that to me just seems a lot safer, despite the macro risks.
Let's take a look at Rhynhardt. It's down 4.3%. We also saw massive losses coming through for the banking sector as well in today's session. Taking a look at Rhynhardt and with regards to what we saw in the intervention in Switzerland, is there any play you would have to get exposure to the fact that now we know where the Swiss franc is going to be trading, especially against the euro?
Yeah, look, I suppose if you look at Rhynhardt, it certainly does benefit from a weaker Swiss franc. So I think in terms of the earnings impact, all else being equal, it should actually be to the advantage of Rhynhardt shareholders, although the price had to adjust in rand terms because the rand weakened by 8% relative to the franc. I think what worries me about Rhynhardt more is that global watch sales has been extremely strong, and I think investors tend to forget that those sales numbers tend to be extremely fickle. So when world markets fall, watch sales go backwards, and I think the base is extremely high, especially in those emerging market, say, countries where they have been showing very, very good growth. I think I wouldn't be surprised to see in a couple of months' time those numbers to actually be going backwards. So me personally, I think Rhynhardt has had a fantastic run, but I think the level of earnings is certainly very high, and I think the macro risks is starting to maybe take its toll on some of the watch sales numbers, even though we haven't seen it yet. But I think looking forward, I think investors should perhaps start anticipating that.
A few stocks on the commodity front actually performed quite well today. I was alluding to them a bit earlier. ARM up 2.3, Harmony up 1.5, Amplat's interestingly enough also up 1.3% today. What is your sense with regards to some miners doing very badly and others enjoying gains?
Look, I think interestingly, I think the ones that you mentioned that were up today did very badly yesterday. So I think Amplat's had a very bad day yesterday. So same for African Rainbow Minerals, and Harmony, I think relative to the gold sector, also had a bad day. So I think a one-day move, it's quite difficult to, I think, read too much into it. What I can say though is that I think if you look at the ratings of most of the commodity shares, they're certainly not believing the current level of metal prices, and we I suppose tend to fall in that camp as well. So we tend to think that metal prices are maybe a little bit high, and that we're actually surprised that the price of, say, iron ore and, say, copper has not fallen further. But the equities are certainly discounting lower prices already. So even though I'm more bearish on the metals, I think if you look at the kind of the ratings of an Anglo American or a BHP Billiton, I feel a little bit better. So we tend to think that generally the large diversified miners are perhaps a little bit undervalued, but it's not the type of shares that tend to do well when there's a lot of uncertainty in terms of the global macro environment.
Let's touch on Adcorp and Paragon. Adcorp down 1.5% today, Paragon up 1.5% today, and of course Adcorp making a 662 million rand bid for the ICT resourcing company. What is your sense on this? We know that Adcorp seems to be one of the favourites when it comes to South Africa if you want exposure to the labour market. Do you think this is a good move?
Yes, I think definitely so. I think our position would be that we've been fairly large shareholders in Adcorp for quite a few years, and if you look at the industry in which they operate, it's clear that sector is going to deal with a lot of regulatory say risks and maybe changes over the next couple of years, and I think it just makes sense going forward to rather be a very large player that can actually deal with all the change that will be happening in that sector over the next coming years, rather than being a small player. I think it's quite likely that a lot of the smaller players will actually fall out, and that the strongest will certainly remain standing, which will definitely benefit the Adcorps and like the Paragon. So I think it does make very good strategic sense, because it is a very fragmented market. I think the likes of Adcorp has actually less than 10% market share. So to actually bolster up the business, I think is the right way to go. If you look at the markets in which they operate, Adcorp tends to be more focused towards the blue-collar segment of the market versus the Paragon guys that tends to be more white-collar, so slightly higher up the value curve, more scarce skills, specifically more in IT, and that is probably the one segment where Adcorp doesn't really have any kind of foothold. So I think in terms of synergies, it certainly also makes a lot of sense. But the transaction is done on like a value for value basis, so you won't see a large uplift in share prices in the short term, but I think a very clever long-term strategic move.
Fantastic, Rhynhardt. Pleasure to have you on the program. Thank you so much for joining us.